Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian stocks. They traded mixed on Friday earlier throughout the Asian session, with Shanghai stock market recovering from a sharp sell-off in the previous session. After bouncing between gains and losses in the morning session, China's Shanghai Composite recovered from Thursday's 6.5% plunge to notch up 0.5%. In the previous session, the Shanghai bourses posted its biggest one-day loss since January 19 on the back of news that more Chinese brokerages are tightening margin lending rules, spurring fears that the retail investors-driven rally may be coming to an end. Meanwhile, moving to Hong Kong shares over there enjoyed a reprieve after closing down 2.2% on Thursday. The Hang Seng Index ticked up 0.3%. And of course, Japan's Nikkei 225 Index finished just a tag above the previous day's close to clinch a 50-year closing high on Friday. While, of course, movements in the dollar-yen limited bourses advanced, the Tokyo Index has chalked up an 11th session winning streak. This is the longest since February 1988. The Japanese yen moved away from an intraday high of 123.58 and fell back to 123.90 against the US dollar. Australia's S&P 200 index led gains in the region to finish at more than 3-week high. The Aussie dollar closed yesterday's session at 0.7652 against the US dollar. That's about 80 pips down from the opening of 0.7735. In Europe, equities opened flat on Friday following data releases, and of course uncertainty over Greece weighed on the sentiment. Greece continues to dominate market sentiment, with the prolonged Reform for Aid talks topping the agenda for finance chiefs for G7 meeting in Dresden, Germany. Greece's government intends to reach an agreement with its lenders on a cash for reforms deal by Sunday this week, brushing off comments from Eurozone officials suggesting a deal was far from imminent. The euro, of course, traded at 1.0950, up slightly on the day and holding above a one-month low of 1.0819 touched on Wednesday. In the commodity sector, we're looking at gold. It was hovering above 2.5 weeks low on Friday as the dollar gave back some of its recent gains. But of course, the metal was still headed for its second straight weekly decline on the prospect of higher US interest rates. Gold, however, it looks set to continue to trade in a 1180 to 1195 range with a break to the downside. We're looking more likely in line with the surging dollar. Also, we believe that the precious metals momentum is currently to the downside, with of course fresh selling expected on a break of 1171 support level. Crude futures rose about 1% this morning after American inventories fell for a fourth straight week, although prices are set for a weekly drop on a stronger dollar. Data from the U.S. Energy Information Administration showed yesterday's report that crude oil inventories fell by 2.8 million barrels last week. The fall in crude inventories in the report was more than 857 barrels drawdown that was forecasted, and of course contrary to the build of 1.3 million barrels estimated by the American Petroleum Institute. And of course, for the very important agenda today in the calendar, this is the preliminary GDP first quarter report for US. It's coming out at 12:30, which is revised to be lower than previous. Keep an eye on the calendar, important events today. Thank you very much for joining us. See you next time. Bye-bye.